What's going on, traders? Andrew O'Connell here with Pristine Capital, coming at you with yet another market recap video. It is March 9th, 2022. Let's dive into today's price action. And oh my gosh, we finally got a green day, team. Before we dive into this video, quick risk disclaimer: nothing in the video should be construed as investment advice or recommendations. Always follow your own trading plan and your own risk parameters. And last but certainly not least, do not YOLO your entire account to any one of my trades or anyone's trades for that matter. Always follow your risk management. All right, let's take a look at these headline indices. Look at this. SPY was up 2.68%. Apparently, this was the biggest one-day increase since June of 2020. So it really just goes to show how volatile the market is. NASDAQ QQQ finished up 3.6%. IWM small caps finished up 2.82%. The dogs of the Dow were up 2.1%. And the ARK Innovation ETF was up a whopping 5.27%. Pretty much all the indices closed towards the upper end of their day's range. And we had a volatility contraction across the board, which is great. The VIX has been at obscenely high levels. It's been around like a 35 handle. And now the VIX is coming into about 32. So still very highly elevated. But hey, we'll take what we can get. Nice red day for volatility. And then look at this. The market breadth was very positive. We had 84% advancers in the SPY, 90% in the Qs, and everything else, just as good. Looking fantastic across the board in terms of breadth. Oh my gosh, look at this heat map. All this bright green. This is like blinding my eyes right now. And it is a stark contrast to what we've had over the past couple sessions. Look at this. Apple was up 3.5%. Microsoft up almost 4.6%. Google up 5%. Tesla up a cool 4.19%. So yeah, we're seeing the strength across the board. And we did not see strength in energy, which is great. We've been having this big issue where energy prices, they've been skyrocketing like pretty much every day like clockwork. These energy stocks and crude oil prices have been rising. And of course, yesterday we got the announcement from the Biden administration that we would not be importing Russian oil. And I had a feeling that this could end up being a topping event. We had a Twitter Spaces yesterday where I got to talk with a bunch of other market professionals, panelists, etc. And there was this overwhelming bullishness about energy. And, for me, I was like, hey, I think this really could be a topping point for energy. This doesn't seem like good risk reward. I'm currently short the XLE ETF. And so what we see here is all these safe havens pretty much, sold off today, which is great. We have the gold miners down 1.14%, XLE down about 3%, and the utilities down 0.71%. Big bounces in every other sector, though. So you can see the ARK FinTech Fund, big bounce of 8.73%. Big bounces for the blockchain assets as well. And of course, we got that good news that the executive orders around blockchain assets, they were not going to be harmful to the ecosystem. So we got very nice moves overnight for Bitcoin and Ethereum. Let's actually pull those bad boys up. So let's see, we had, and this was some good foreshadowing for today's price action. Look at that, nice big green candle yesterday. So yeah, Bitcoin really just continues to float around between about 35,000 and about 45,000. And I think a large part of that is just, it's a product of the environment. The market is super weak overall. A lot of these risk assets are down in the dumps, but we continue to get positive developments around this cryptocurrency ecosystem. The newest development that we just heard today is that State Street, which I believe has like $4.1 trillion in assets that they have under their control. They're a big custodian bank. They are going to be offering custodial services for their institutional clients. That way they can hold their Bitcoin. I remember working with them when I used to work at Vanguard. Okay, so Ethereum, very similar deal here. So yeah, bottom line, we got a very nice snapback rally. And of course, like yesterday, the title of the video, I believe it was like peak frustration. And it certainly was. I mean, for the past couple days, we've just had like a relentless sell-off. And now we finally started to see some relief. Style factors. OMG, look at this. So we had the momentum style factor at 4.01%. International momentum at 4.33%. And yeah, the growth style factor was up a whopping 3.75% as well. So all the risk on assets, essentially in a nutshell, those are bouncing very hard. But that being said, we're still in this really ambiguous tape where the volatility is still incredibly high. So when volatility is high, it's almost like a power gauge for the market. And the volatility works both ways. So today we saw that upside of volatility. Here's the seasonality of the market. And you can see that in March, a lot of times the market does make a seasonal bottom. So we'll have to see if that seasonality comes true for this year. But so far it's been playing out pretty much to a T. All right, let's take a look here at our indices. So this is noteworthy. Check this out, guys. So remember, yesterday I was like, oh man, we closed below the yearly point of control of 4186.25. And that's a big no-no. That really just opens the door to a test of this 4055 yearly value area low. Today, with the rally, we're now back above that 4186 pivotal level. So what I'm noticing is on this weekly chart, look at these weekly candles. So January really started off with a bang, right? Where it's pretty much like completely vertical, like we just slipped into the abyss. And the pattern that I'm starting to notice is in the beginning of the year, complete straight line down. And now we're getting a sort of like a rounding out of this pattern. So I certainly wouldn't mind if this pattern just continues to round out, and then we start moving to the upside. That would be the ideal scenario. But let's take a look here. So far on the weekly chart, this candle not looking all that bad, and the week is not done yet. Let's go to our daily chart. Boom. All right, so daily chart. Oh yeah, here's another positive development. My trend model flipped from a -3 to a +1. My trend model's been at -3 for maybe like the past couple weeks or so. So that's a good development. So yeah, here we are. We have our monthly value area low at 43.32. That really is the next upside level to retest. And this pink line, this is our 20-day simple moving average. Could we get another retest of the 20-day? Absolutely. What matters most though is what happens when we retest the 20-day simple moving average. If we were to be able to break out above it, that would be the ideal scenario. That means, hey, we might have a more durable bottom in the market. But when you're in a bear market, it is very normal to have periodic retests of the 20-day simple moving average. Let's zoom in just once more to our hourly chart. Check us out. We're doing a multi-time frame analysis here. Look at this. This is our weekly value area, and this is the hourly chart. We are zooming right into resistance. We have our weekly value area low at 4290.75. So with that being said, that about does it. No, I'm kidding. No. So with that being said, let's take a look. What's really going to set the stage for the market tomorrow is the economic data that is coming out. So guess what data point is coming out, team? We have, and I'm logging on to Trading Economics right now. Check this out. Boom, Trading Economics, great website, free resource, and it's pretty awesome. So check this out. We have core inflation data coming out tomorrow. We have our CPI. It's coming out at 8:30 a.m. Check this out. So the consensus estimate for the inflation CPI data point is 7.9%. That is incredibly high. Look at this. So it just continues to rise, and it's anticipated to rise once more. I would imagine these economists, they continue to underestimate inflation. So my baseline assumption is we are going to get an inflation print that's either right in line with consensus or maybe even just shy of the consensus. If that happens, I think the market will perceive that positively. Like, hey, we've all been panicking about inflation already, so it's not a big deal if we just get a confirmation of the reality we already know exists. Where we could really get a scare is if the data point comes out above the consensus estimate. So all eyes are going to be on that data point. That is definitely going to dictate the price action tomorrow. So yeah, it's going to be another wild one, team. All right, so with that, knowing that data point was coming out, I didn't want to do a ton of trading. I didn't want to add to new longs. Take a look at what I did today. Let's see here. What do we got? Where is this? Yeah, so I didn't do a whole lot of trading today. Check this out. So I closed out a half of my SPY March 18th, 418 calls for 1248. I paid 960 for those. I bought those yesterday as the market was approaching the bottom. And I closed out another half for 1289. Just because this was like a, excuse me, sorry about that. I didn't get enough sleep last night. Actually, I just got a Whoop band, and it showed me that I only got like 4.5 hours of sleep last night, so I got to do better tonight. But anyway, so I closed out the second half of my SPY March 18th, 418 calls, and closed those out very early. I was like, hey, I'm only holding this trade for a single day, not even. I was able to pull a good like 30% out of it. So I was like, hey, I'll take 30% in a day. But then I did take an L on this KWeb position. So KWeb, I had these May 20th, 37.42 calls. Closed those out for 62 cents. I paid an average cost of 420 for those. I put on this little note, when Russia invaded Ukraine, that impacted the near-term prospects for Chinese equities. U.S. pretty much made all Russian assets take a huge hit and or go to zero. I believe there's some anticipation here that if China invades Taiwan, the U.S. will do the same thing to them. So when I put this KWeb trade on, I had high hopes for this. So I was like, hey, the economic data in China is bottoming. All these names are trading at such steep discounts. You know, this is just awesome, a great opportunity. So I was like, let me buy these calls. I'll buy them with a few months of time on them. I did not anticipate that Russia was going to invade Ukraine. And so when that happened, that really just took this downtrend into a whole new gear. So yeah, look at this. KWeb, bunch of red candles in a row. I made the executive decision today, hey, let me just take out what I can from this trade and I'll reallocate it somewhere else. Now, I know there is a good chance that I literally closed out my KWeb right at the exact bottom. But I just knew, like, in my heart of hearts, hey, I don't have like an edge in this trade anymore. Like, there's multiple reasons why it's not going to work. And yeah, for that reason, I just took it off. So yeah, those are my two trades for today. Again, yeah, I didn't really want to get, you know, too in the weeds trading a bunch of stuff. Let's look through some assets that are actually looking pretty solid right now. So we had CrowdStrike, which is a cybersecurity company. This is a leading name. Report earnings after the bell. Look where we are. So we went from about 169. Now we're trading up in the after hours. Voila, here we are. So we're trading up to 190. Not really that big of a bump in the grand scheme, but hey, they beat their estimates. Maybe this could lead to some positive action tomorrow for another cybersecurity stock, Palo Alto. This one, I really like this chart pattern right here. Finished up 5.67% today. And you can see in the after hours, it's up about another percent. So this name looking pretty solid. If I was in the market for a new name today, this one would have been at the very top of the list. But just for prudence with that inflation number coming out, I didn't want to go crazy adding to some new trades. You know what I'm saying? All right, MP. This is Mountain Pass. And this is one that's been consolidating for quite a while. It's a rare earths producer. And think about it. We have all these geopolitical risks. We want to be energy independent. And this company is right at the epicenter of that movement. And you can see it just broke out from this monthly value area. So MP looking pretty solid. And then all of these solar names, this TAN ETF. There's going to be a big push now because we know that Russia basically, you know, we have to play into their hand essentially over oil. You know, there's going to be a big push for alternative energy sources. And you can see, look at the volume that's coming into this solar energy ETF. On these green bars, we're seeing increased volumes. This looks very good. One name specifically within that group, it's looking pretty solid, is this Sedge. Look at this, nice pattern, SEDG, looking very good. Then if we look at traditional dirty energy, look at crude oil. First day that we had some red action in crude. So this is good. This is good for America. It's good for my fellow workers at the gas pump. And so, yeah, hopefully we get some continued downward action in crude. And I hope so. That way it helps my short position as well. With that being said, that about does it for this market recap video. Hope you all had a great trading session. Enjoyed that green action. And I'll see you all tomorrow. Have a good night, everyone.